Hi there, Evan here with Crypto and Markets for Friday, November 16th, 2018. Going to talk the oil markets today before I head home for the weekend. Of course, the price of oil has had a fall from grace really since the beginning of October. It got announced on Sunday of this week that OPEC was going to do a 1 million barrel a day cut in December. Price had a bit of a pop to 61, kept falling after that. And then on Tuesday or Wednesday, when the price is around 55, this is WTI, not Brent, by the way, that the 1 million barrels a day became 1.4. The price has had a small oversold pop since then, but every bounce really has been sold into. Now, what's the real story here? The last ramp all started, of course, when the Iranian sanctions got put on. And then the story was production was coming offline, there was going to be a massive supply shortage, and the price is going to $90 or $100 a barrel. And then in May, Trump started tweeting at OPEC to raise production, keep prices down. They did go ahead and raise production to counteract the Iranian sanctions and the oil that was coming off the market. But nonetheless, the geopolitical tensions were keeping the price of oil elevated until roughly about a month and a half ago. But dig down further into it, though. Remember, I did 2 videos on this about 6 months ago, saying how there was going to be a demand slowdown in oil as the economy was slowing. More specifically, that was the later part of May when the emerging market currencies started having their decline, and I stated at that time, with the decline in the currencies, it was going to make it harder for the middle class to essentially buy goods, and that was going to hurt, consequently, the demand for oil, as a vast majority of demand growth comes from these emerging markets. And what happened? Early in the third quarter of this year, roughly about 4 months ago, demand growth peaked and has been going down ever since. That's the main story here. The real story is a demand slowdown. Now, one area where the bulls do disagree with me is in the third and fourth quarter of next year. They're calling for a ramp back up in demand growth, with the world likely headed into a recession in late 2019, early 2020. I just don't see it. And the main reason why OPEC is cutting production is they see the demand slowdown coming and know it's their only option. Now, as far as what this means for Canadian oil and Canadian housing, again, don't read too much into the WCS spreads. If you actually look at the oil they're getting into Cushing, Oklahoma, the price is still about $5 less than WTI. So it isn't quite as bad as the media makes it out to be. Nonetheless, tar sands oil has a higher cost of production. Consequently, we know this isn't helping the producers out there at all. Credit actually Mateen Katusa, by the way. He's actually been all over this. There was already about a 250,000 barrel a day decline in production in the oil sands because of this. Synovus and, can't remember off the top of my head, sorry, someone else talked about this earlier in the week. Combined, there was another 130,000 barrel a day cut in production coming a few months down the road. As far as what this really means for Canadian housing, look, Alberta housing peaked in 2014 and really hasn't looked back since. And really, for the Canadian economy, I'll just leave this here. The ramp up in real estate has meant a lot more to the economy itself than resources the last 5 or 10 years. So look at the Canadian economy, the Canadian dollar. Don't look at the oil price. Look at the real estate market. But again, back to my main point about the oil markets in this video. It's not about supply. It's about demand. That's the big worry here. I mentioned it 6 months ago. Demand growth is slowing down. And as we slow down economically further globally in 2019 into 2020, that demand growth slowdown will continue. That's all I want to say for this video. Hit the like button, leave a comment down below, subscribe for more, and most importantly, follow me on Twitter, @CryptoMarkets2. Have a good day, everybody.